Hi there, Serial Trader here. It's been a while since the last update, but I want to have a look at the major US indices now that we've had quite a bit more pattern development. And of course, I'll focus here on SPX. So what I'll do here is, okay, on the weekly chart, let's just have a look at where we could potentially be. So I'm still leaning more on the side that we have off the March 2020 low, that we have the 1, 2, we have the 3 at the January top there, and that we've been in this wave 4, although this is certainly a more, I wouldn't say more severe, but perhaps a longer lasting wave 4 than I perhaps would have expected given the size of wave 2 or the duration of wave 2. This wave 4 is starting to look a little bit out of proportion, which also starts arguing for a different alternate scenario, and we'll certainly get into that afterwards. But I mean, just on this big picture view, okay, so if this was the origin of wave 3, and wave 3 ended there at that January top, and we do a fib retracement. So right now, as far as the retracement level for a wave 4 of wave 3, we're still in the range of normality between the 38.2% and the 50% retracement. Now, of course, the 50% retracement will be a little bit closer to this 4,000 level, which also lines up with this gap fill. I think that's even on the weekly chart that this is a gap. To fill that gap would be 4,020.63. So that's kind of an interesting, technical magnet, as these gaps typically like to get filled, especially on a weekly chart, never mind a daily chart. So if we are going to go a little lower, then 40.20 or around 4,000 seems like a pretty good magnet. But we may already be done. We may already have the lows in place, and let's also examine that. But also, so the duration of wave 2, let's compare that, since the retracement is certainly not out of the realm of ordinary for wave 4. Let's look at the duration. So we'll go on the daily, so it'll be a little bit more precise. So let's just do the duration of wave 2 and project off of the proposed wave 3 high. So we're well past the equality duration, but what about the 1.618? We're past the 1.618. How about the 2? Okay, so let me just leave that up there for now. So right now, if wave 4 did end there on the 2nd of May, so the first trading day of May, which it might have, we can go on the short-term charts, or short-term time frame charts, and look at that. But we basically took twice as long in wave 4 as we took in wave 2, which, I mean, it's a little bit out of proportion, but not terribly. You can certainly find other valid examples of a wave 4 taking, twice as long as wave 2. So that's not a game or a deal breaker or anything. But it is certainly long. Okay, so I'll just remove that. I mean, if wave 4 was like many, many times the duration of wave 2, well then I think that starts to violate the guideline of the right look. But I don't think it's quite long enough to declare that a no-go just yet. Okay, as far as since we have, I like to just start a fresh count now that we've had more price action. So off our proposed wave 3 top, I think you can make a case, and I didn't like it, but now you kind of are forced to adapt and go with it, given how much price action has transpired. You can make the case that, okay, you had some sort of leading diagonal 5-way move down. Since we do have the 4-1 overlap, you have to accommodate it with a diagonal. And I don't like calling it a diagonal, but sometimes you have to compromise here after everything that's transpired to get the best fit. But certainly, as it was in progress, and even before we came down again here, I did not like the interpretation that was a 5-wave diagonal move down. But now I think there's really no denying it. Okay, so you got that. And then this is definitely a 3-wave move up. Certainly at the time I was looking for it to become a 4 and a 5, but we just kept going down. So there was no 4 or 5. There was just a 3-wave move up and then a decline to new lows. So ABC up. And I think it's much easier to get a 5-wave move down here. That's probably a little ABC expand flat 2. Yeah, that's probably 3, 4, or 5 perhaps, if we are complete. So it's easier to get a 5-wave impulse down to finish. and then we'll get to the more recent action off of the current low. But then I'll also add the higher degree. So 5 down for A. We could have just all this time been in what amounts to basically a simple ABC down. 5, 3, 5 down, right? Okay. And perhaps that is the larger wave 4 complete. But certainly not enough evidence to support that just yet. But just a thought. And one thing I do want to bring up is, okay, do we have, since we did a 5-3-5 down, now we did break the lows of February, but not by much, and we're just kind of hovering around that area. Didn't really get a great, flush down past those lows. Okay, and do we have some bullish divergences? Well, yeah, we do. So here's the RSI low, which is actually the January, fairly close to the January price low. And you can see since then, basically higher lows in RSI despite grinding out some marginal lower lows on price. So that is a bullish divergence on the daily RSI. And same idea with the MACD moving averages. A little bit of a bullish divergence there as well. And perhaps just a modest bullish divergence on the MACD histogram. But not to worry about that. Just pointing out, if we are potentially making a low here, that's what you'd want to see is some bullish divergences, which currently exist. So, okay. Add that to, checking off some boxes for the potential bullish scenario. Now, if we go on, maybe we'll do a 15-minute price chart. That's probably acceptable. Okay, so here is so far, the low that we made here on the 2nd of May. Okay, now I know this looks like a three-way move up, and then, we're just going to come down and make lower lows, but I'll propose a solution to that can still allow for a bullish outcome. Okay, and I definitely see, yeah, we could just have done an ABC up, and we're, working our way to, working our way down towards lower lows. But I will have to point this out because it's valid. This could easily, you can get an impulse wave out of this, I would say. Okay, so this could be a 1, and then we could be like ABC down, ABC up, and then 5 waves down. So like a, sorry, not that. Let me recalibrate. Yeah, so that we'll call that the 1. ABC down for the 2. Now let's just put these placeholders here. But I want to show the subdivisions, and that would be A down for B, like ABC down for, ABC down for A, ABC up for the B. So this does look like a three-way move up, although it was an extreme on that Fed day. And then you can come in here and get a 5-way move down for wave C. Okay, and let me just drop the degree down sufficiently on that. So this could be an extremely deep wave 2 expanded flat retracement. Okay, and we could be beginning, the initial 5 up, 3 down for the coming wave 3. And don't worry about the position of wave 4 and 5 here. There's kind of a placeholder. So if the lows hold, this is the wave count that I would offer to you, that we have this initial 5 up for 1. We have this very kind of exaggerated ABC expanded flat wave 2, that coincide with the Fed day on Wednesday, and perhaps the initial beginnings here off the secondary low, which was a slightly higher low than Monday's low on May 2nd. The initial 1 up, 2 down, and maybe looking for the 3, 4, 5 of the of a larger 3 to come. Okay, so that is how the bullish scenario would look if it is playing out. But again, we need a lot more action to the upside to start believing in that. Now let's go back to the daily chart, because actually we'll even go back to the weekly chart. This could take a while, but I think it's worth going through this exercise. So if we really have put in, the big top, and we're starting some sort of cycle or super cycle or grand super cycle correction or decline, And we did finish 5 waves up off the pandemic, March 2020 pandemic low. And that also finished 5 waves up off the September 2009 low. And that finished another 5 waves up from, like, you know, the 80s or however far back you want to go. Multiple degrees of trend ending, if that's true. There is a way we can get there. It's not as attractive to me, but it's certainly not out of the range of possibility. And that's where we did this. Okay. So off the March 2020 low, we did the 1, we did the 2. You can get a kind of ugly but passable 3 out of the subdivisions here. Wave 4, I mean, I don't love it. It's not as, it just doesn't seem to match. Usually wave 4s are at least, you know, as significant, if not more significant in duration as wave 2. In this case, I think the wave 4 is a little shorter in duration compared to the wave 2, and even less so in magnitude to the downside. But okay, it's not a deal breaker. You could technically correctly label this 1, 2, 3, 4, 5 up complete. Well, if that's the case, it doesn't change our subdivisions, but it changes the context in which they exist. So we could still have 5 waves down, but instead of for A, it would be for a larger one. And we could still have a three-wave move up, but instead of B, it would be for a larger 2. And then this is where we have to get into the weeds a little bit. Okay, so we would probably call that 5 down for a minor 1, 3 up for a minor 2. Now this would be 5 down, but definitely doesn't have the right look for a third wave. Okay, like if I do the 1 versus 3 or A versus C relationship, we didn't even get down yet to the equality relationship, and we're actually just kind of sitting around the 7-8-6 relationship between the proposed C versus A or 3 versus 1. So obviously wave 3 is supposed to be very powerful to the downside, you know, at least a 1, 6, 1, 8 or more usually compared to 1, which would be a whole lot lower down. I mean, even just the 1, 6, 1, 8 here, that'll get us to basically 3,500, 3,498. Nowhere near that yet, right? So given that, we could be subdividing wave 3. So just bear with me here. And if that's the case, okay, we got 5 waves down. Okay, but it's actually 5 waves down just for the larger 1 of 3. And I'll adjust the, and we'll get a, maybe this is like an A, B, C. Maybe we'll do a little expanded flat or flat wave 2. And we'll get the 3, 4, 5. Now let's just get the degree the way I want it. So we'll drop that down by 1. We'll drop this down by 1. That'll work better. So yeah, 5 down for the initial 1. Do maybe an A, B, C for the initial 2. Now, of course, we could have done the whole ABC here as well, although it's a little short in duration compared to our initial 5 down. But it's possible, because you got up to that prior 4th wave of the lower degree and then, you know, backed off and tanked right from there. So it's possible we got the 1, 2, and we're starting the 3, but I would lean more just on the guideline of the right look that, okay, this is actually just A up, B down, since we seem to be holding the low. And we'll get one more move up in C, maybe sweep the stops up here for everyone that's short against the, you know, that 4,300 area. Do that, complete the 2, and then have the 3, 4, 5 down of the larger 3. And again, it could be lower. I'm just putting these kind of placeholders in there. So if we are going to, you know, continue making lower lows and not find support here, I think this is kind of the game plan we're working with. So I think there is opportunity down around these lows. Now, whether it's a bullish or bearish opportunity, I think that's really where the debate comes in. But okay. So I presented the bullish count. I presented the bearish count. I mean, if the bearish count is getting going here, I mean, there's so much more downside to go. But I'm not quite ready to buy into that just yet. So let's just clean everything back up. Go back to our kind of bullish orientation. Because I think that's what offers the more attractive risk-reward trade setup at the current moment where we are. Just let me back up here. Okay, that's probably acceptable. let me just pause this and get it where I want. Okay. Yeah, so we'll go back on that 15-minute chart. Now, obviously, you wouldn't be looking to actually trade SPX unless you're doing an SPX option spread or something, or buying SPX calls or puts. But if you look at the, if you're going to trade the futures, for instance, or even a index ETF or leverage ETF, same idea. You'd be working with the May 2nd low. Also, I'll mention, if you are going to put in a significant higher low for a month that'll hold for the month or even longer, typically it'll happen early on in that month. Well, May 2nd was literally the first trading day of May, and so far, despite all the volatility last week, that May 2nd low has held, and it looks like we might be starting a little something to the upside, okay, as of Friday there. So given that, you would enter anywhere near current levels because it's not that far away from the low. You would have your stop at or just below the low, and you'd be targeting 4,300 plus or so. So as far as like a risk reward ratio on the futures or whatever vehicle you choose from, okay, let's put the stop at the low, enter near current levels, and at least be targeting the high of the week, if not higher. So even just that gives you a risk reward ratio of around 3-to-1, which is pretty good. And obviously, if we get significantly higher above that 4,300 area, the risk reward ratio just keeps improving depending on your upward targets that you're working with. But I think from a risk reward perspective, and also given kind of the short term little 5 up 3 down we might have been starting there on Friday, from a risk reward ratio standpoint, I think just an attempt at a long trade, knowing that it might get stopped out, but it's not too far away. And knowing that if it doesn't get stopped out and we do have something more substantial beginning of the upside, there's a lot more upside potential from entering your current levels than downside to be realized if you put a nice tight stop underneath the low of the month, that May 2nd low. So that's kind of my idea there. That's the mindset I'm working with. Okay, so I think I went through basically what I want to go through there as far as the wave patterns are concerned. And don't get me wrong, like, this is not a high confidence moment. We're still near the lows. The bearish, alternate could very much be enforced. There could be way more downside in the market. I fully understand that, but it doesn't hurt to take a bite when you can have a stop that's reasonably tight, and you do have some reasons for a bullish mindset, including the divergence, bullish divergence and all that on the RSI and the MACD indicators there. But okay, and also looks like we have a 5-wave move down completed. So after a 5-way move down, you would expect at least a partial retracement up. And again, it looks like this doesn't quite adequately retrace this, even if this is just an initial 5 down for a larger third wave in progress. Looks like we need more pattern development, counter trend to the upside, even in that scenario, in my opinion. But anyways, gone through that enough here. Okay, well, I think I presented what I wanted to there, and on the weekly chart, yeah, if I'm on the right track with the bullish scenario, and we did potentially just finish that wave 4, then there could be quite a bit of upside in wave 5. Again, well into the 5,000s. It's not out of the realm of possibility yet. In fact, where does that completely fall apart? The possibility of wave 4, you have to get 4-1 overlap, which you'd have to go down and take out 35.88 on SPX to truly invalidate the idea that this is a wave 4 correction. Now, of course, you don't want to get long here and hold all the way down there, knowing that, well, it could still be a wave 4 unless it overlaps with 1. Obviously, that's why you have the tight stop against the May 2nd low. But, technically, we could entertain the idea that it's still a wave 4 as long as it doesn't take out the wave 1 high, which is still very far away. Anyway, that's really what I wanted to mention with that. Okay, so let's go to the Thinkorswim platform here. Now, we do have I guess you'll call it a death cross. We have the 50-day simple moving average. It's crossed below the 200-day. But it's not a very good one because the 200-day is still kind of flat, more sideways. When the 200-day is sloping down more aggressively, and then you have a bounce up, and then the 50-day crosses back below, that's a more meaningful death cross. But okay, you have to acknowledge that, yes, there is technically a death cross on the daily chart. And we're still well below all the major moving averages. kind of languishing near this oversold level on the stochastic oscillator. Now, as far as the candlestick, might have been a little bit of a reversal attempt there on Friday. We certainly tested the lows, but then closed quite a bit higher. So there's that. Now, on the weekly chart for SPX, possibly, yeah, kind of a gravestone doji. Potentially, I mean, we've been down 1, 2, 3, 4, 5 weeks in a row. I mean, it's kind of getting long in the tooth as far as going down 5 weeks in a row, right? Even if we are in a downtrend, you might be expecting, you know, a counter trend move to the upside after going down 5 weeks in a row. And you do have the potential gravestone doji, you know, unconfirmed reversal on the weekly. Okay, we are almost in the oversold condition here on the weekly oscillator as well. I'll mention that. Okay. So that's SPX. Now on the Dow Jones. Now, interestingly enough, I will actually just go in here maybe on the hourly or the 4-hour quickly. Because on the Dow Jones, you can go with a little bit different of a wave count still. So we can still get like an ABC down into the... what low was that for the Dow as far? Okay, that was the February low. So we can still go with an ABC down into the February low for the Dow. And we can actually still go with an a 1, ABC 2, expanded flat 2, 1, 2, 3, 4, 5, wave 3. This can be a wave 4 because it didn't quite overlap with this proposed wave 1. And then we did get one more pop up in wave, you know, what could be considered a wave 5. So you could actually get a 5-wave move off the February lows on the Dow. And so far, we got an potential A, B, C down to it's a deep one, but a higher low on the Dow. Okay, so the Dow could still be ABC down, 4th wave complete on the Dow in February, and then 5 up, 3 down, so initial 1, 2 for the Dow. So that count doesn't work on the S&P and the Nasdaq, but it does still, for now, as long as we hold the February low, it still holds in there for the Dow. Okay, so the Dow might just be a little bit more bullishly situated than the other two indices. That is still possible as long as we hold the February low on the Dow. Okay, just thought I'd point that out. Anyways, daily chart candlesticks looks like a potential little bullish reversal. You know, closed above where it opened. Nice long lower shadow. Still closed down marginally for the day, but not much. Not much else to remark on there. Death cross on the Dow as well, technically. Below all major moving averages on the daily. Weekly, potential gravestone doji, marking a potential reversal on the weekly, but we need to trade up this coming week to add some credibility to that. But just pointing that out. Okay, that's the Dow. Nasdaq Composite. So the Nasdaq Composite, I think you would just be going with like a 5 down, ABC up, and another 5 down, potentially complete or nearing complete here. So you could either do ABC down on the Nasdaq, just like the S&P, or similar to the S&P, or we could, again, in the more bearish scenario, 1, 2, 1, expecting a bounce up in 2 of a larger 3 of 3 decline to come in the more bearish scenario. So that's similar to the S&P as far as those two scenarios in play here. Death cross on the Nasdaq. Didn't really get much of a daily candle to remark on there on Friday. Okay, weekly on the Nasdaq. Maybe a weekly gravestone doji. But again, we need to trade up pretty aggressively next week to entertain that idea that we are putting a low and reversing from it. Coming into the oversold condition on the weekly oscillator here on the Nasdaq Composite. Okay, and the Nasdaq 100, I don't think there's much else to add to it. I think it's very much the same as the Composite. Yeah, I believe it is, so I won't add anything to that. Basically a mirror image of the Composite. Okay, now on the VIX, one thing I'll point out that also kind of adds to my leaning a bit on the more bullish outcome still is, okay, we are making, so every time we spike up in VIX here, and we've had several of them in the last few months, we're spiking up to lower highs. So this was the VIX spike we did in January, okay? And this is the VIX spike we did in February. This is the one we did in March, and then these more recent two in, well, beginning of May, May 2nd, and then now May 6th as well. Okay, so we're making lower highs on all these VIX spikes, despite making slightly lower lows on SPX. So that would be what I would consider a bullish divergence, because if SPX was making lower lows, but VIX was also making higher highs, that'd be more bearish, more confirming of those lower lows. In this case, it's not confirming. It's kind of an argument against the significance of those lower lows, because the VIX is not confirming, it's making lower highs. So if we were really breaking down in a wave 3 to the downside, I would expect VIX to be making significantly higher highs, not lower highs. So that is another reason that has me entertaining the more bullish scenario. I guess leaning on it a little more heavily still for now than the bearish scenario. Just thought I'd point that out. Always good to look at VIX compared to SPX, right? Okay, and also the VIX VVIX tool. Let's have a look at that. So VIX VVIX tool, we are on the cusp of a fresh buy signal. So we're kind of starting to get back below the red moving average on VVIX, and we need to confirm by getting back above the blue moving average on SPX, which isn't far away at all. It's right around 41.53. We're currently around 41.24. So that could happen as early as this coming week, this Monday, right? Now, not much of a... So we have the SPX low here on May 2nd, but that also was the VVIX and VIX high. So there's not really a divergence between that low and those two highs. And there's also no real divergence between VIX and VVIX. They both look very much in tandem. Although the only divergence to point out, of course, is the actual lower high on VIX going back to the beginning of the year, January, February, March, April, May. We've been putting lower spike highs on VIX compared to lower spike lows in SPX. So that's the only real divergence, bullish divergence to remark on there. But certainly getting close to a potential buy trigger here, according to this tool. All right, well, that's probably all I wanted to go through. Video was a little longer today, but there's been quite a bit that happened since the last video, so I just wanted to go through some stuff. And yeah, so I'm definitely... Oh, also I'll mention, there's been a lot of day trading opportunity because there's been huge intraday volatility in big ranges. But as far as catching a nice trending move and just sticking with it and being able to hold on to it easily, we haven't been in that condition for a while. And that's the kind of condition I prefer. Of course, I can get in there with the rest of them and day trade if necessary, but not my preferred market conditions to deal with. But given that we're right around kind of the lows of the year and potentially trying to reverse off them, I think from a risk-reward standpoint right now, trying to catch along with a reasonably tight stop, below Monday, May 2nd's lows, and trying to catch some sort of at least, if not counter trend balance, perhaps the beginning of a new uptrend. Of course, way too early to tell which one of those we might be starting here. I think that makes a lot of sense here. Do you really want to establish... if you're already short from higher levels, congrats. That was a good move to catch. But if you're just sitting here with no position, shorting down near the lows where we're kind of reacting off of, that doesn't make a whole lot of sense to me from a risk-reward standpoint. I would like to see a little bit more of a counter trend move up if that's what's going to happen. Get a better location for entering a bearish trade. And then if it starts rolling over, give some confirmation. Then, okay, maybe we're in that super bearish scenario and things are just going to really fall apart. But for now, I kind of like the idea of just taking a nibble at the long round here. It makes sense to me. All right, Serial Trader signing off.